Robschild, no investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do, and so we begin. Today is Wednesday, July 31st, 2024. In today's episode, we had the FOMC meeting today. It was calculated in that there would be no cut. I think there was still like a 5% chance yesterday, but yeah, no cut for today's meeting. The decision documents, if you looked at the revisions from the previous FOMC release, you could see that there pretty clearly that there was stronger confidence in things continuing to cool. Everything is pointing towards a September cut. The tone of the meeting, the documentation, everything is pointing to that. So unless some data comes out as showing like crazy inflation coming back in any way, it's extremely clear there will be at least one, I'll say at least one cut in September. I'm not gonna say that there's no chance of there being a 50 basis point cut in September. We don't know. Things could be cooling off faster than we anticipate. Especially, it's all about the unemployment number. Let's go through my points on the paper here. So Jerome Powell's answering questions sounded very dovish to me. My favorite quote was that we don't want to see further cooling of employment, and they're more and more confident about their control of inflation. The focus is now on, is employment going to be cooling off faster than expected, and so we need to cut in order to save that, basically. He directly mentioned his and my own favorite measure, the unemployment rate. I've been talking about this for forever. That's the one number that probably matters the most. It's the percentage of people that want a job that supposedly can't have a job. There are people out there that say, well, hey, look at the job openings. There's still 8 million jobs out there. These people are just being choosy. I don't know how true or not that is, but what I do know is when unemployment it goes higher and higher and higher and higher, it tends to snowball on itself, and that's when you get the normal business cycle, recession, clearing of bad debt, bankruptcies, the tide going out to see who's wearing clothes, as Warren Buffett puts it. However you want to put it, we're at that point. The first cut is in September. A few other quotes. I didn't watch the whole thing. I did watch a lot of it. He quote here, we can begin to dial back our restrictive policy. That means we're going to be cutting, basically. And then also, downside risk to employment is real. Again, all documents, all discussion highly points to a cut in September. He basically is saying it's on the table. And 1 month away. And so the likelihood, I believe, with my crystal ball is definitely we will have our first cut in September, at the very least. Theme of the day, not a lot going. There's not a ton to show in the charts except for TLT. I guess that's important to bring up. I did a show earlier today that covered that. I guess I'll go over it again in this, but main themes. Thursday we have Amazon earnings after the close, could shake things up. How much are people buying stuff on Amazon? I like looking at that. It seems like a good measure for me anyway. But then the real big, most important thing is the Friday unemployment number. The expected number is to be flat at 4.1. By how Powell was talking, I'm pretty sure he knows that it's higher than that. I'm pretty sure it's higher than that. My only question is it 4.2 or is it 4.3 or even or higher? Yeah. So I'll leave it at that for now. We'll see what happens Friday. Daily reminder: 2-year, 10-year yield curve is still inverted past its second birthday. I don't believe that's ever happened before in the history of the United States, and so we could see a very, very severe recession or depression from this metric alone. it wouldn't be an unusual thing to happen after such a long yield curve inversion. On to some charts. I've been talking about the S&P 500 being in a very obvious, lower high, lower low, lower high, lower low, lower high. We seem to be breaking out of that pattern, or at least widening it for now. And so, is this headed to all-time highs? The markets right now are kind of blindly looking at like, okay, the cut's coming now, rates are going to be going down, therefore money is cheaper to borrow, therefore earnings of companies can be expected to increase from here. It gives confidence in the valuation of stocks overall. I think that's what's going on here. I imagine it'll be short-lived. Again, we'll see. Earlier today I did a video on TLT, because as far as a chart pattern goes, today is the day that I have been waiting for I'll basically say 2 years. It hasn't actually been 2 years, but that's when this pattern started, this inverse head and shoulders. If you go back to August of 2022, you have the shoulder, the head, the shoulder, touching this exact line. I made sure to draw it exactly correctly, and we didn't just like break through it, we gapped over it, and so that gives it actually extra strength to continue higher. The target on this for TLT would be about 113. As you might know from me talking on my show, I have over 50% of my own assets in more leveraged versions of TLT. I expect this to do well, especially over the next 6 months. I also mentioned in the earlier video today, well, how valid is this, in inverse head and shoulders? Well, it played out pretty perfectly the other way starting in 2019, where we had a very clear head and shoulders that broke the other way. And the target, coincidentally, was about the same height from this neckline here to the bottom of the first shoulder of this current pattern. So it's really interesting how psychology and pricing of markets works. And it seems to me we are definitely headed into maybe even like a area that's like halfway between these two patterns. We thought that inflation was transitory. That was the theme, that was the word that we were all using for the inflation, and then inflation took off much higher than we expected, so we cracked the other way, and now everyone's afraid of inflation. Oh no, inflation's going to take over the world. I don't see it anymore. I think it's done. And so now I expect us to at least get to a middle ground point in the pricing of TLT, which does help. And again, the price of TLT can represent inflation expectations. There's other charts for that, so I'll bring them up when they become more relevant. But it all makes sense. The fear of inflation going away. When we have disinflation, deflation, that's when TLT can really go up. But right now, it's sort of not worrying about inflation anymore, which will allow the value of TLT to rise here. Another little chart, TNX. This is the 10-year Treasury yield. This one is used by a lot of businessmen to, figure out, for their businesses, how they can borrow money at what rates and all of that. And it's a very similar pattern here to the TLT, obviously. Well, not very similar, exactly the same in the 10-year yield. Again, in the 30-year yield is a little different. I wanted to also bring up, TLT doesn't actually represent the opposite of the 30-year yield by itself. Its duration is 24 years, so it's actually closer to the 20-year bond than it is the 30-year bond. I always talk about the 30-year yield on here, but it's between the 20 and the 30. It's 24, that's the duration. But the 10-year note has the exact same pattern, where we touched it actually twice here, very clear shoulder, head, and this is our shoulder, and we broke it specifically today. And so it's a pretty exciting time For those of us that are treasury note bulls, those of us that believe interest rates are headed lower. Predicting interest rates is nearly impossible, as Graham talks about, and it's, most people say it's not worth it because of how hard it is, but nobody has a crystal ball except for me, Robschild. That's why you're here. That's why you watch my show. Interest rates are going down. I just know it. All right, so fear and greed index, notably we were in fear mode yesterday and we bounced back up to neutral. Will it launch us back into greed? I don't know. Again, I'm taking everything that's happening in markets with kind of a huge grain of salt until the unemployment number comes out on Friday. That's all for today's show. Hope you enjoyed. Thank you for watching Robschild.